let me, I guess, simplify this. So just to make sure I understand what you're saying. So now you're saying, JP, the wizard over here, is saying that, okay, I'm going to, when I'm doing that terminal funding, I have, let's say, $1 million sitting inside my investment accounts. So we call it the liquid bucket. So let's say we have $1 million sitting inside a liquid bucket, and I want to retire a bit earlier now. So now you're saying, okay, well, if I don't have that $1 million cash, I have a $1 million portfolio. If I sell that $1 million portfolio, yes, I'm going to realize the capital gains tax, and yes, my passive income that year is going to be way higher than the limit, which means I'm not going to pay any tax now on the small business deduction, because I'm probably going to jump up to the general tax rate of 26%, probably, right? Because $1 million portfolio, capital gains tax, passive income, going to jump to general tax rate. So I might pay that this year. However,
only for a split second.
Okay.
Because that $1 million of cash, when it's contributed to the plan, gives you an offsetting corporate tax deduction
on the same general tax rate of 26%.
At the same rate, whether it's the low rate or the high rate, you're getting 100% deduction on that dollar.
So that
for
evens
a
out.
Second, you got tax, but the next second, it's eliminated by the pension contribution.
Perfect. So that's what I just wanted you to confirm. Okay.
So you pay zero tax. Yeah.
Perfect. So they're not going to be worried about passive income tax and all of this. Okay, great. So we're going to pay that for that split second. Then, now I've only paid, like you said, 50% of capital gains tax is included. Okay, great. So I'm only paying tax on 50%. But now when I make that $1 million contribution into the pension, you're saying I'm going to get a full massive tax break on the full $1 million. So even though to sell the investment, I only pay tax on the 50, but to make the contribution into the PPP, I get the tax break on the 100.
Yes.
So that's good, right? That's amazing.
That means zero tax payable by the corporation that year.
Okay, so that's amazing. And now the final thing here is when we sell passive investments inside our corporation, we have this notional account called the capital dividend account, and now that money credits the capital dividend account. So let's say for easy math, it's $500,000 that this credits. So now you're saying I can take $500,000 out of my corporation, give it to myself as a dividend, and pay how much tax again, JP? Zero.
It's tax-free.
Wow. Okay.
That's what I'm saying. So you're only paying tax on the $90,000 because the rest are tax-free dividends.
So JP, the $1 million question is, have you even invested the client's money yet?
No.
No. It's just tax breaks. It's just tax breaks, tax breaks. If you found this clip valuable and you'd like to listen to the whole episode, then please go to Spotify or Apple or Google or wherever you like to listen to your podcasts and search for Your Rich Fulfilling Life Show for the whole episode.